Okay, very good morning. Hope everyone is well and has managed to navigate the snowfall. So hopefully you're up and running and ready to go. So just a summary of the major events which we'll cover in this briefing. Really three main points from a news perspective. Obviously the market's still very much digesting the kind of hawkish testimony we had from Jay Powell yesterday. We've had some Chinese data which was weaker than expected overnight on the trade side, and then we've also had a few news headlines in regards to the Bank of Japan as well. So I'll cover through those, and then I'll get Sam on as per usual, and he can have a look at the charts from a more technical perspective and some of the key levels he's got his eye on today. So just having a look across the broader asset classes though at the moment, you can see still very much a reflection of a stronger dollar, at least for the time being. You can see on the top left-hand corner you've got both euro dollar and cable equally down about 35 or so pips. So even though you're getting a lot of Brexit headlines, as you all well know, today is the release of an EU draft document about some of the legal text in regards to their vision of Brexit, and then you've got Theresa May on Friday. So the frequency of Brexit headlines definitely has increased, but for the here and now, I'd say this is very much a dollar-driven environment. Certainly this will change, I would imagine, for cable in particular when come Friday when Theresa May does speak. But yesterday and for the moment, the market is still digesting the bigger macro picture, and that definitely is what the markets think about the Federal Reserve and this idea that potentially, given the signals from Powell yesterday, are we going to have 4 instead of 3 interest rate hikes? So dollar strength still a prevailing theme. We're still above 90 in the dollar index. We jumped that level yesterday and we're up about 0.2%. So it's keeping both these major pairs on the back foot. Gold obviously weakened quite substantially yesterday, and we've held on to the bulk of that move just given the appreciation of the greenback. And equity markets, as you can see, just looking at the S&P here, we pretty much took back the entirety of the gains that were seen the day before. So if you remember, we gained by about 1 to 1.5% across the major 3 US indices this time yesterday. But overnight, the sell-off kind of continued all the way into the close, essentially. So you can see the reaction here to when Powell started speaking in the actual live audience session with the politicians in the House. And the market just continued to move lower. We have stabilized a little bit at the moment, but the general tone again has been one of a hawkish interpretation. So the US 10-year, likewise, yields still remaining elevated in the wake of that event, and so consequently the US 10-year still is flat on the session, but we are meaningfully lower from where we were at this point yesterday. So let's just have a bit of a recap on what exactly it was that Powell said. And this is the type of headline that you're reading this morning if you're just coming into market. So Powell's rosy outlook invites the Fed to weigh 4 2018 rate hikes. So let me just run through some of the key comments that Powell said yesterday. He said, "My personal outlook for the economy has strengthened since December." He said, "We've seen some data that will, in my case, add more confidence to my view that inflation is moving up to target." That was a really key one that market participants kind of latched onto to see that initial dollar strength when the comments came out yesterday. He also said that we've continued to have strength around the globe and we've seen fiscal policy become more stimulative. So some quite upbeat comments here from Powell. He did also add, there was also positive on the growth or the outlook for growth. He said that some of the headwinds that the US economy faced in previous years have now turned into tailwinds, i.e. they've got over that now, and now it's just pushing onwards and upwards in that respect. So what's happened then? A quick look at some infographics to kind of make sense of why this renewed optimism, and this is one which we've shown you guys before, but this is kind of just looking at the broader picture and the recovery post the recession from the subprime crisis, obviously of 2008 and half of 2009. And what you can see here is the US average hourly earnings in all private sector employees. This was the trigger point, of course, and we had that really big jump. That 2.9%, don't forget, was against a market median expectation of 2.6 when that payrolls report came out. So that was exceedingly strong, and that's what sparked that sell-off at the beginning of the month. But what it's translating to is this. So this is looking at the average end of this year's forecast for federal funds target, the upper bound in terms of a Bloomberg survey. So if you remember, interest rates have a federal funds range, which is currently 1.25 to 1.5%. So this is looking at the upper bound, the 1.5%. And at the end of 2018, right now, market participants are banking on the interest rates in the US will be at 2.35%. Of course, if the Federal Reserve execute just the 3 interest rate hikes that they're currently forecasting that they're going to do, well, interest rates will only get to a maximum top end of 2.25%. So we've kind of gone into this complete change from what we've seen for the last few years, where the market is underpricing the Fed's trajectory of rate increases. Now it's almost flipping, just given the circumstance of this renewed kind of view about rising inflation and consequently the Fed's reaction. And so instead of an end of year, what the Fed are currently saying is 2.25%, the market is priced 10 basis points above that now. So not quite a full 4th rate hike yet, but certainly, as this chart would suggest, as we've gone through, see the initiation of this really sharp incline was the 5th of February, or excuse me, the 2nd of February. That was when non-farm payrolls came out. And then ever since then, it's just kept going higher. So very interesting to watch. And I did see quite an interesting phrase but someone tweeted this morning. It was like, so if we have 3 rate hikes, everything in the world is fine. And if we have 4 rate hikes, it's the end of the world. It almost feels that way in terms of how the market is responding at this point over such a, what could be argued, a fairly incremental change in the actual rate of interest. But this is what the balance of which the market's trying to strike at the moment, and we're sitting right in the middle of that, between 3 and 4. Obviously, March is going to be key, as we've said a number of times. That's when we get the latest projections, and if the Fed are going to up the rate hike frequency, that's when they're going to telegraph it. So ahead of that, you could be expecting as well speeches, if that was their intention to kind of prep the markets up, that was going to be the case. But for the moment, this belief of 4 hikes continues to gain some traction. Some other things to be aware of. Overnight in China, we did have some economic data. So just looking at these charts here, this is the Chinese PMI numbers. So you've had the manufacturing and non-manufacturing PMIs. So as you can see, taking the overall service PMI sub-index as well, all of them have seen a significant dip. And actually, these were not only weaker than expected, but manufacturing managers' growth expectations came in at a 20-month low, and actually down a full point from January, and the largest fall in the manufacturing reading in more than 6 years. So this has also just grabbed a little bit of attention in the overnight session. Asian indices generally negative. This getting a look in addition to the negative close on Wall Street, where the S&P finished down about 1.25%. Fairly similar margins in regards to losses in the Dow and the Nasdaq last night. One other thing that you've had as well is you did have a little bit of yen strength overnight, but I'd say that a lot of that's been recovered. If you're wondering why that yen strength occurred, well, that was because the regular bond buying purchases conducted by the central bank in Japan, they basically tailed off and reduced the size of their purchases in the long end of the curve. So this is part of that Rinban operation, and something as well which sparked some concerns a few weeks ago about Bank of Japan tightening. But this really is a more function of operational and their yield curve targeting more than it is, I think, of actually anything influential of the changing of policy. Don't forget, you did even have Kuroda speak overnight, and just to ram the point home, he said that once the central bank starts to normalise monetary policy, the process would be very gradual, and the Bank of Japan would pay attention to any risks in the economy. So I don't think that this is they're going to make any changes anytime soon. And as I said, the yen has already retraced, because I think most people in the market are of that same view. Other things just to be aware of. Obviously, we are keeping an eye on the Brexit headlines. UK's May is ready to fight with the EU over draft Brexit deal. This obviously comes about that whole ECJ story with the publication of the legal text from the EU forthcoming today. The Prime Minister preparing to reject the European Union's draft Brexit deal, according to a senior official. We've already had a couple of tweets. This is probably the go-to person as far as getting leaks and sources, kind of the ear to the ground of the Brexit rumour mill. This is Laura Kuenssberg, who I'm sure you're all familiar with, the political editor of the BBC. So she's already been tweeting this morning, and in summary she said here, the government expected to dismiss today's draft as being just that, and Brexiteers have been given private assurances that the government position has not and won't change. So as you would imagine, we already had people like Boris Johnson saying a similar thing, but Theresa May at the moment kind of needs to remain firm in her position in regards to things like the custom union, in spite of what Jeremy Corbyn and the Labour Party have done at the beginning of the week, in order to keep these Brexiteers on side. So to be monitored, and she's a good person to follow if you are tracking that situation. All right, quick look at the calendar. And the day ahead. You've already had that Chinese data, and as I said, that was a little bit weak, but I think overall European markets are brushing that aside. There's still an expansionary territory, let's not forget, when it comes to the economic data. And just looking at the charts at the moment, equities are continuing to just claw back some of those losses that were seen late into the runoff in Wall Street and overnight in Asia. So if you're looking at the DAX, pretty decent recovery since the initial Eurex open and the dip that we had to a close test of S1, and just coming back up towards pivot at the moment. Otherwise, from the Chinese data, looking further forward, probably the main thing that you'll be looking out for from a European perspective will be the Eurozone CPI data. That's going to come at 10 o'clock. So let's just quickly go back. We're looking at the year-on-year was at 1.3%. Expectations are for 1.2%. You've got a range of 1.1 to 1.4. So 1.1 certainly would be fairly interesting, because obviously looking back on the 12-month data, we've never gone that low in the last 12 months. 1.4 just puts us back to the December level. So certainly this will be something to monitor, just given the ongoing focus on monetary policy based on the premise of inflation being the key metric to drive the policy decisions at the moment. Otherwise, into the afternoon, you got the second reading of US GDP for the fourth quarter, often seen as the most preferred measure from the Fed as well for looking at inflationary conditions. You got the PCE numbers coming out later on this afternoon. Chicago PMI 245, pending home sales at 3, and then you'll get your oil inventory numbers coming out at 3:30. Just on the subject of that, we did of course have the APIs last night. So the API crude oil inventories, just to give you a summary, we had a build of 933,000. This was a slightly smaller build than anticipated, actually, of 3 million. Cushing was a draw of 1.277 million. Gasoline, though, was a fairly large build of 1.9 million. Distillates a draw of 1.473 million. So following last week's surprise drawdown, expectations were for a sizable build, but the API is not quite reflecting that, a little bit more modest. But gasoline inventories did increase, and actually, in terms of the market reaction to this when it came out, as you can just about see here, we did actually have a slight dip at the time, and WTI crude does remain a little lower this morning. We're down about 30 cents, but don't forget the dollar is also firmer this morning and has increased in value since the UK and European participants have come into market. All right, that's it from me. So have a good day. I'll see you in the chat room. I'm going to hand you over to Sam. I'll catch you later.
Hi guys, good morning. Just going to have a quick look. Start off with the currencies, going through the charts. Just bring one of those into the picture here, and you can see a bit of dollar strength this morning. In fact, the dollar just on at the higher levels of the day, up 0.2%. You can see the euro here pushing through that low, similar time, and we'll show in a minute where pound did as well, just breaking through to the new low not long ago. And if we just make this chart a bit longer time frame, you can see how important that sort of area had been. Well, you can see here circled up from the 9th. A breakthrough here sort of opens the door a bit further to the low that we made on the 17th of January. So what was looking back at this chart, really clear double top. You've almost got a bit of the neckline coming into play here. So in terms of a technical point of view, really important whether we look to hold around here. Let me just bring that into a better picture here. So that low, the 17th, 122.09 on the futures, big level. You've got the two key tops in play here and here. So I'll be interested to see what happens there. I mean, a breakthrough to the downside, and the next sort of really key point of interest would be the highs that we made at the beginning of the year on the 2nd and the 4th of January. But a bit of a big range, if you like, using those highs and lows. But euro is certainly an interesting point going into the day and then rest of the week. The pound, I'm just going to wait for the chart to load up, but here you go. Similar to the euro, albeit not as aggressive. We had 1, 2, 3 tests on the 139 before finally breaking through. 1, 2, 3, and you get the breakthrough. And I had this level marked up 138.88, not the biggest level in the world, but you've had a bit of a reaction around there, and also 82. So that sort of whole area found a bit of support. It could well be that 39 handle, 139 offers the area of resistance for a bit of a move down, and yesterday's low being quite key in that respect. I think if the euro was to come down and break that low that we talked about, nothing to say that the 14th and the 12th, that double bottom in the pound can't be reached as well. Putting this chart on, just sort of showing the year, you can see probably worth having this trend line on as well that we talked about a couple of briefings ago. As well, just trying to see if we can get a move eventually higher and then find resistance on that point. Looking at the down move that we've had, probably worth having a trend line on this and then just lowering the time frame down as other possible areas of support. But for now, 139 looks quite interesting. The pivot and the highs of the day offered good resistance for the move so far. But just breaking through with the dollar still on the higher points for the day. Have a quick look over Aussie dollar. Just going to put this on a 60 minutes so we get a bigger picture. Just looking at, let me just refresh the chart as it's not showing the pivot points. There you go. Marking up the low here, I'd have the pivot and highs involved. I think in terms of an area that interests me to perhaps continue this dollar strength, you've got the low that we made on the 26th could offer some good resistance if we were to push up there, but I think the pivot could hold for now, for perhaps the increase in dollar strength into the afternoon. I was chatting with Tommaso in this room earlier about the yen and the possibility of the pivot acting as resistance, and we both thought it would be quite a nice area. You did, however, at the time we were talking, just have a break of that trend line. You can see here, nice break, then hence the bigger push through. And to the upside, let me just mark that on. I don't mind the whole pivot area, and I was saying it possibly one where the average price of the entry is around this sort of point to look for the continuation to the downside, but we'll bear in mind any strength of the dollar if we do get to that point. On return to the downside, where the move really sort of started around here could be of some interest. But for now, sort of in the middle of the range, it wouldn't be a case of me wanting to jump into the market either way right now. Have a look over at US equities, and just as I got home yesterday from the gym, sorry about that, US equities were on their lows, and it was actually quite interesting to see the volume at each price point was a lot bigger than obviously what it had been a few weeks ago. But the selling was it was quite aggressive in that. I haven't seen that for probably a week or so. But look how well this area of support, and I was watching it come in. I didn't trade it at the time actually, but I was just watching, and you can see here how well, and then the buyers really sort of took over. In terms of where we are now, in this sort of range where we found the high of the day worked quite well early morning, and then just now as well. Probably wait for the afternoon again just to see where we can go. I think if we were to move a bit lower, I like the look of the S1, which was the high of that 22nd around here. I think this is a nice area. You've even got the sort of the breakthrough that we had on the 23rd. So ideally, that's all things considered right now, that's where I'd like the look of. It's going to be similar to the Dow. You can see if we were to come back down, perhaps I would prefer, around the S1 or what was the high of the 23rd. Ideally looking for that pullback through. I think if we were to break through the highs, so remember the S&P, those highs, I think it could get quite messy around that pivot area. So in terms of a long, it would be more if the pivot was to actually break, and then you can sort of target where the sort of selling happened yesterday. Nasdaq going to be similar sort of case, and it was funny yesterday looking at the Nasdaq, and it could easily have got the all-time highs yesterday. Let's be realistic. If it had another day like Monday, we'd be there now. But same again, just preferring. We'll actually have a go. Yeah, I think if we come back down a bit more for Nasdaq, this is an interesting point in the market. There you go, just above the S1. Something to bear in mind there. Quick look over at DAX European equities. Let's have a look at the price action this morning. Yeah, down, up, usual for the DAX really, and now just coming off those better levels. So something to bear in mind. Probably to have a bit of a trend line going up from these highs as well, just on this time period to perhaps be aware of later in the day. Pivot, or just above pivot, I think I prefer really with the higher points that we saw at the end of yesterday's trading, but looks a bit messy really for me. With the pound coming down earlier, FTSE's just been boosted a tiny bit, almost hitting the high of the day. So equities, both in the US and UK, just coming off their highs, and obviously the DAX as you saw. So perhaps a bit range bound. You can see the low of the day working quite well there. And after breaking through this bit of resistance, could find support here. FTSE CFD 72.47. Obviously oil data later in the day, so we'll come and sort of visit that later on. I'm not a massive fan of getting stuck into trading that before the data release on a Wednesday, or usually Wednesday. Another market that seems quite range bound at the moment, you've got gold that's sort of stuck in this range. Nothing really happening, as you see here. Just going to mark up what I believe the key levels of support and resistance are. To the upside, I think I like the look, and especially if the dollar strength sort of looks to come back at this point. If we get around the pivot, the previous low of the day yesterday before we broke through, I think could be a nice area to get involved for that trade. You see yesterday was actually quite good in the fact, I know it was going on a sort of volatile period just after 1:30, but when we broke through the low of the 26, came back, and it offered really good resistance for that move. And I could easily see those sort of levels from yesterday morning not been seen for a while, especially if the dollar strength does continue. Any questions, please do get them in the chat, and if not, I hope you have a great trading day, and I'll catch up with you all later on.